Good morning, traders. Today is June 17th, and here's your daily market briefing covering the US dollar index, WTI crude oil, spot gold, and Australian dollar. So let's start with the US dollar index. The dollar weakened to around 98 on Monday, its lowest level since 2022, as geopolitical tensions between Israel and Iran continued for a fourth day. Despite the international calls for calm, but both sides have carried on airstrikes, keeping the markets on edge. And traders are also watching the G7 summit closely for any unified response to global conflicts, including the wars in Ukraine and the Middle East. And looking ahead, this week's big focus will be the Federal Reserve. While the Fed is expected to keep the interest rate unchanged, the markets will be paying close attention to the updated economic projections, especially in light of President Trump's latest policies. And from a technical view, the dollar index is still trading below its 20-day moving average of 99.08, keeping the bearish momentum in place. If the selling pressure continues, we may see a move down to 97.6 and possibly even the 97 mark. And on the upside, the resistance stands at 98.68 to 98 and 99.08. Moving to crude oil, the WTI prices pulled back slightly to around $70 a barrel on Monday following last week's 7% rally. That surge was triggered by the reports of an Israel strike on Iran's South Pass gas fields and a storage facility near Tehran. However, the mood shifted after the signs that Iran may be willing to de-escalate and resume nuclear talks. This helped to calm the fears of a broader supply disruption. And shipping traffic through the Strait of Hormuz, a key oil route, has seen only a slight dip, suggesting minimal impact on actual crude flows so far. But risks remain. If Iran moves to block the strait, the prices could spike well above $100. And technically, WTI has clear key resistance at a 200-day moving average around 68.28 and is holding above the $70 psychological mark. If it breaks 74.74, the recent high, it could push towards the 76.27 or even $80. A drop back below 70 could trigger a retreat towards 68.28 or even lower. So now let's talk about gold. Gold prices retreated from a high of 34.65, slipping below 3400 as tensions between Israel and Iran showed signs of easing. Tehran's willingness to restart the nuclear talks reduced safe haven demand, while the market's attention now shifts to the Fed's rate decision and inflation outlook. The market expects the Fed to hold rates steady, but inflation data from last week came in soft, which has fueled a speculation of a rate cut in September. If CPI data continues to weaken, that could support a further rally in gold. And technically, gold has pulled back from its recent high but remains supported above 3380. If that level holds, we could see a move back towards 3405 and 3410. A break below 3380 could lead to a test of 3350 or even the 3300 level. And finally, Australian dollar. The Aussie dollar recovered to about 0.652, supported by the easing geopolitical concerns and a slightly weaker US dollar. The risk of escalation between Israel and Iran has lessened for now, and that's helped the risk assets bounce. But meanwhile, markets are watching Thursday Australian jobs report. For the forecast suggests around 25,000 new jobs and a steady unemployment rate of 4.1%. A stronger print could reduce the chances of a rate cut next month and provide support for the Aussie. Technically, the Australian dollar is still holding above 0.65 with support around 0.6466. Resistance levels to watch are 0.655, 0.656, and the 8-month high of 0.6581. So in summary, the markets are cautiously optimistic as tensions in Middle East ease. But the situation remains fluid. Keep an eye on the Fed's meeting and Aussie jobs data later this week. They will be the key for short-term direction across the board. And thank you for tuning in and trade safe.